Well, even with the recent rebound, one of our traders is sounding the alarm over foreign investors looking to lighten up on U.S. assets. Rebecca, what are you seeing? What have you heard?
So I was in D.C. this past week for meetings of the International Monetary Fund, World Bank, and it's really kind of speed dating for macro nerds. You just get policymakers from all over the world, investors and researchers like me, and you get a good take on where your peers are, your investors are, and the policymakers are. And what I walked away from was more certainty than I had had in Liberation Day, those first few days where people were saying, who's selling? Is it foreigners selling? But we didn't know for sure. What I'm seeing now is that there are a large number of foreign investors who are worried not only about tariffs, but just about America's reliability as a partner. And I think they're looking at a huge U.S. allocation that has built up over the last several years and saying maybe we should have a little bit less, just trim off the tops, right? And basically have a risk premium on U.S. assets because we have so much uncertainty. Mm-hmm. And so what does that look like? You know, the U.S. Treasury puts together how much foreigners own in U.S. assets. As of the middle of last year, which is the latest number, it was about a little over $30 trillion. So if you just hypothetically pretend you're the chief investment officer of a major overseas pension fund or sovereign wealth fund, you say, I'm going to take 2% off my U.S. stocks, 2% off my U.S. bonds, 4% shift, incremental, small, no big deal. That's $1.2 trillion. That is going to be leaving the U.S. Now, it's not a crisis. This isn't happening tomorrow. These investment committees will take months to think about things. They'll have a meeting, they'll have a board approve it, and then it gets implemented. But what this is a slow bleed of support out of the U.S. markets, either going back to home markets or into new opportunities or things like gold. Mm-hmm.